An Intelligent Investor: How to Analyze the Stock Market, Make Smart Investments, and Create a Steady Stream of Passive Income. Written by Armani Murphy. Narrated by William Harvey Jr. Chapter 2. How? Invest in the right ways. To learn how to invest, we first have to look at some of the terminology you will undoubtedly come across so that you can better understand as you research and start to put your money into options. Risk and return. With any investment, there is a risk and return, and the first term is what scares most people away from investing in the first place. The risk that you could lose your money will always be there. There is no such thing as a risk-free investment. There are, however, investment types that are less of a risk than others, and you will read about these in the next chapter. Return is the measurement of what you get back from your investment, whether it is a loss or gain. The money you put into the investment is subtracted from the money you get out of them after selling or cashing them in, and that is the return on investment. Of course, then, those investments that have a higher rate of risk will usually have a higher rate of return. We all want high returns, but as you will see by the next term, it's very necessary to have both high and low risk investments in your portfolio. Diversification. The most intelligent investors out there are the ones that diversify their investments portfolio. It is extremely important not to throw all of your eggs into one basket when it comes to investing. You should definitely spread your investment money around to cover all of your bases. The worst mistakes that beginner investors make is putting all of their money into one company. There is no way to fully predict what a company will do, even if estimates can be made, so you want to make sure your investment portfolio shows that you have stocks and/or bonds in multiple companies. Not only that, but you need to make sure that your portfolio continues to reflect diversification throughout your investing career. Always feel free to make adjustments and rebalance your accounts, since stocks will regularly rise and fall in terms of their value. Robo-advisors. Short of hiring a financial manager, which is fine to do as long as you have the cash, you can use a robo-advisor to help you with your investing. A robo-advisor is perfect if you're just starting out, because they use algorithms to automatically help you invest to the optimum level. Most of the robo-advisors are very user-friendly, and they are rapidly gaining in popularity. One well-known robo-advisor is Betterment. The good thing about Betterment is that there is no minimum balance and a low annual management fee. They also offer a variety of accounts, including IRAs and Roth IRAs. With Betterment, you can have access to actual financial advisors, and you can open either an individual or joint account. Betterment is often rated as the best robo-advisor by many different websites and finance gurus, but there are many other robo-advisors as well, such as SoFi and Ally Invest. Ellevest is a great robo-advisor that promotes.
Sample complete. Ready to continue?